What is rule breaker investing? Most investors follow rules. Buy what's cheap, follow the crowd, trade often. Rule breaker investing does the opposite. It focuses on finding exceptional companies early, holding them for years, and letting innovation do the heavy lifting. This isn't about timing the market. It's about owning the future. If a business is changing how the world works, it deserves your attention.
Rule breakers look different. Rule-breaking companies usually share strange traits. They look expensive. Traditional metrics don't explain them. Experts doubt them early, and they reinvest heavily instead of paying dividends. Think about companies that create new categories, not just compete in old ones. Rule breakers don't ask, is it cheap? They ask, can this company dominate for the next 10, 20 years?
Long-term holding is the real edge. The biggest mistake investors make? Selling too early. Rule breaker investing believes time is the strongest advantage an investor has. Great companies compound. Revenue, brand power, customer loyalty, network effects. You don't need many winners. Just a few held long enough can outperform dozens of short-term trades. Patience beats prediction.
Volatility is not risk. Prices move. Businesses grow. Rule breakers understand the difference. Market drops don't destroy great companies. They create opportunities. Real risk is owning average businesses, constantly switching strategies, and letting fear control decisions. If the company's mission, leadership, and moat are strong, temporary price drops are noise. Think like an owner, not a trader. Rule breaker investing isn't about charts, it's about ownership mindset. Ask yourself, would I be proud to own this business for 10 years? Does it solve a real problem? Is it led by visionary leadership? When you invest like an owner, you stop reacting